The S&P 500 broke its 6-day winning streak. However, it did hit a new all-time high along the way, as did all the other major indices here in the United States. In fact, the NASDAQ Composite actually closed a little bit lower today, closing above 14,000 for the very first time ever. Remember that particular exchange slash index just celebrated its 50th anniversary here recently, so that's quite the feat. And then we also saw a nice little surge out of the Russell 2000. The small caps have been lighting the world on fire here recently, and they were up another 0.4% today. So we'll take a look at all that, see if it means anything towards our posture. Then we'll get into our trade application example, where I wanted to focus on a technology-oriented company that is showing a nice little bounce pattern. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's February 9th, 2021. First of all, if you're new, welcome aboard. Remember to go over to our YouTube channel and click subscribe. While you're there, check out our description area down below where you can sign up for our email distribution list. That entitles you to not only receiving notifications on when we post the videos, but also gives you a heads up in the email itself as to which stocks are giving you overbought and oversold cluster signals using the market forecast, at least within the S&P 500. In addition to that, we're heavy users of Twitter. Many of you know that David and I probably use that particular social media more than any other. I saw that they just reported their earnings after hours here tonight, by the way. And so anyway, if you want to continue the conversation beyond what you're learning in our classes and in these YouTube videos, feel free to engage with us there on Twitter. My handle is @BrandonVanZee. We really appreciate those of you that click like and retweet on these Market Outlook related tweets. Last but not least, we also have a presence on Facebook at that web address you see in front of you. All right, let's jump into our charts here today. And as you can see, I've got chart 4B pulled up here in front of us. This is just a basic 4 grid here using the market forecast technical indicator on the 4 major U.S. equity indices. And as I mentioned in the intro, you can see here we snapped our winning streak in the S&P 500 today. We were down, but not by much. We were down 0.11%. You can see that along the way. We were able to capture a new intraday high, however, on an all-time basis. You can see 3918 was touched here during the session today. Dow Jones also hit an intraday high of 31,439. However, it did close basically flat. It was down 0.03%. NASDAQ Composite, as I mentioned before, closed above 14,000 for the very first time ever. That was good for a gain of 0.14%. And the Russell 2000 was not to be outdone, as it was up the most here today, up 0.4%. How many times have we said that recently? With the Russell 2000 absolutely surging here in the last 3 or 4 months. So we set another not only intraday high, but also closing high on the Russell 2000. So naturally, when we have these types of days, the path of least resistance is to the upside. We didn't have any posture changes. All the postures were strongly bullish yesterday, and they continue to be strongly bullish here today after these really remarkable results that we've been seeing in just the last 3 months. To put things into perspective, the S&P 500 is up 11%. Now that's pretty darn good. We had this conversation in my Monday top-down trend trading class here just yesterday regarding some of our performance numbers. In that particular class, we're up about 25% in 3 months. Now, we're in a lot of the momentum-oriented, kind of technology-oriented areas, so that's why we are so easily beating the S&P 500 in that case. But you'll notice that if you were to look at the NASDAQ Composite, it's doing a bit better than the S&P 500 at 17% higher in the last 3 months. With the Dow Jones Industrial Average, it's a bit of a laggard. It's only up about 11% over that time period. But the big kahuna in terms of returns has been the small cap index, up 38% in the last 3 months. I mean, that is just astonishing. Keep in mind, they were a little bit different than the other indices, as we've mentioned many times. Well, maybe we can go and look at that right now since we're having the conversation. Let's pop on over here to the 1040 crossover method. because I always like to remind you guys that the Russell 2000 is different than the other three in terms of where have we come from. Remember that when we're looking at this particular chart, which for those of you that are premium members following along at home, this is chart 4C. Remember that these are 3-year weekly candle charts. So it gives us a much further look back period than those 3-month charts we were just looking at a moment ago. And I always like to point out that the Russell 2000, up until this run that we've had in really the last half a year, was kind of perceived as the laggard of these four. And the reason for that is you can see that the Russell 2000 was actually trading at its highest level back here in September of 2018. It wasn't until just a few months ago, right here in approximately the November time period of 2020, that we broke to all-time highs. And since then, it has just been up, up, and away in almost a straight line there. So yes, we've had remarkable outperformance in the last 3 months in the Russell 2000, but all things considered, they needed to play a lot of catch-up compared to all of these other indices that were already breaking to all-time highs, right? If you look at the NASDAQ as an example, the NASDAQ, where we were in November, is way above where this thing was trading in September of 2018. So it doesn't really have apples to apples comparison there. So much of the big outperformance the small caps have had in the last 3 months has been part of that catch-up trade, just to kind of get them back realigned with the other indices that had already been doing really well for several years. So anyway, as we're looking at this chart 4C here, obviously we remain strongly bullish with the longer term trends at this moment in time. All of these have what are known as golden crosses. In other words, the 10-week moving averages are above the 40-week moving averages in all four of these charts cases. Let's go ahead and take a look at our 3 green arrows setup now. And so this will be chart 4D. And the 3 green arrows in this particular case is just referencing the 30-day moving average, the MACD histogram, and the stochastic. And as you can see, we do have 3 green arrows on all 4 of our charts. We know that easily here on chart 4D because the background color is that greenish background there, and that tells us that at this exact moment in time, those particular indices have a 3 green arrow signal. In other words, those 3 indicators that I mentioned a moment ago are all perceived to be bullish at this moment in time, and when they're bullish all together at once, it sets up those particular signals, and it just gives you a heads up that this is a little bit better of a trend trading environment. Again, going back to my class there on Mondays and the success that we're having in that particular class, there's a reason behind that. Markets have been drifting higher over time, and if you're kind of pushing into the strongest stocks out there, particularly those that are at the top of our new stock selector tool, those are where you're going to find the best returns as well. It's a little bit of chasing that's going on there, and it doesn't necessarily have to guarantee any sort of success, but there's a time and a place for that style, and right now we are finding that momentum styles are working quite well, so we're trying to play into that a bit. Anyway, good to see here that we've got 3 green arrows on all 4 of our major market indices at this moment in time. All right, let's go ahead and pop on over to the internet here. I always like to get a chance to say thank you to those of you that help support this free YouTube video. Remember, you can do that in a variety of ways, but the way that we pay the most attention to, so if you want to have the biggest impact, is by clicking like for us there on Twitter. And as I've told you guys many times, I'm always shooting for triple digits, and so in this last time around, 123 of you stepped up to the plate and took the 5 seconds out of your day to click like for us there on Twitter. Thank you very much for that. As long as we stay in the triple digits, I have no problems. We get below triple digits, then I start questioning whether we need to do this 5 times a week. So keep it up on your end. You guys have done a fantastic job for me there over time. So thank you very much for that. Also, as I'm looking at some of our more popular recent blog posts here recently, this one is catching my eye. Those of you that are premium members of Market Scholars should have received an email from me on Friday night. It was really late. It might have been about midnight, depending upon what part of the country you were in. But anyway, it should have been in your inbox if you're a premium member of Market Scholars. But I did do a major update to the sector watch list tutorial. And so if we were to pull it up here, remember this is something that only premium members have access to. But when you pull it up, if you start scrolling down a ways on that, there will be a new video here. It's a 47-minute video that will explain the new process where we're including dates within the titles of those watch lists. You also have special bonus watch lists that are in there as well, including the Dividend Aristocrat list and some of the industries lists and things like that. So again, many of you should have received that information on Friday already, but just in case it got sent to the junk mail folder or something along those lines, I always like to kind of point that out here when I have your attention during these videos as well. Also, the sector selector got updated over the weekend, as it typically is, and so as of Friday, these are our current rankings here, and as you can see, we've got some new information to share with you. In particular, discretionary made its way all the way up to the top slot. The week prior, they were only at number 4, so we saw quite a decent relative strength surge into those consumer discretionary stocks there. It did knock energy off of its perch, which had been up there for the prior 3 weeks, up there at the number 1 slot. We also saw a slight drop down there in communications and a slight drop up in financials, or I should say a slight leap higher in financials. Materials did fall a couple of slots. That one might have been a little bit more concerning. Remember, what we talk about in this presentation quite a bit with the US dollar does impact the materials a bit more than some of those other areas. So when we started to see a little bit more strength out of the US dollar in the last few weeks, one of the things that could lead to is weakness on a relative basis in materials, and that's what we are seeing manifesting itself right in front of our eyes here. Remember, materials were ranked number 1 back here in early January, but now with the stronger dollar environment we find ourselves in, we've seen slippage there in a lot of those materials. Down at the bottom, we still have some of those defensive areas like consumer staples and utilities. Also, real quick, wanted to point out something I just posted to Twitter here a moment ago. We've had a string of really helpful market scholars that I always like to recognize when I get an opportunity. And so, Dan has been doing a great job in our market scholars community, in our class forums in particular, kind of listing out the topics that David teaches specifically in his technical analysis trading rooms that are held on Fridays. And so Dan did a great job here going back throughout time and basically showing what all the various topics are. And remember, David teaches a lot about these market forecast indicators in his Friday classes as well. So, like for instance, right here, he was talking about adjusting bullish market forecast scans, looking for the ones poised to make a run soon. So he shares a lot of those market forecast scans there with you. Here's another one where he has the market forecast chart and scan for rare signals. I know he talks about clusters quite a bit as well, in addition to other technical indicators like Heikin-Ashi patterns and Bollinger Bands and Keltner channels and DMI and all that kind of stuff that David does such a fantastic job with his students with. So anyway, big thanks to Dan there, because somebody could take this list, which is posted over on our technical analysis class forum on our website, and then use the dates to go back on our class calendar to watch the various classes where David is teaching about these topics if you were somebody that felt like you needed some tightening up on those particular topics. Like if you wanted to kind of get his insight on bullish oversold clusters versus bearish oversold clusters, going back to the class on July 31st would be an awesome way to kind of gain that knowledge there. So big thank you to Dan. Also had other examples this past week of students helping me out. Jeanette told me about a very interesting way to find the pay dates on the Thinkorswim platform. I shared that with those of you that were in my dividend growth investing trading room earlier today. So, finding the X dates on the Thinkorswim platform for dividend stocks has not been overly difficult, but finding the pay dates is a little bit more of a treasure hunt. And Jeanette was willing to share that information that she learned with me that I could then relay on to our class here earlier today. Also want to thank Linda for pointing out the fact that our closed captioning seems to be working on our YouTube videos now. So if you're hovering your mouse over the YouTube video, you might see a little CC button in the lower right-hand corner that you could click if you wanted to turn on the closed captioning there. And there's also some transcripting availability along with that. And then also Florence helped me out here recently. I had been mentioning that I wanted the Investors Business Daily year-end copy, and mine did not get delivered as it typically does, and she was willing to give up her copy just for my research library. So just a very small sampling of the amazing market scholars that we have in our community. And so if you're interested in joining our community, as always, you can just come up here to our pricing area and click on that premium 3-year full access to learn more. All right, let's go ahead and pop back on over now to our Thinkorswim charts, and let's do some 12 grid analysis. So I'm going to pop on over here to chart 5A. To kick things off, a reminder that on these miniature 12 grid charts, the background color will tell us whether our posture is currently bearish or bullish. Naturally, if the charts are pink, that means the posture is bearish, and if the charts are green, then that means the posture is bullish. Now, the posture that I'm referencing is the intermediate line, or the green line, however you want to say that, on the market forecast technical indicator. So you'll see all of these little labels at the tops of the charts that say intermediate in there. So that tells us where is the market forecast green line positioned right now. And a reminder as well, if you ever wanted to see the market forecast when you're pulling up this chart, so this is chart 5A, let's just say you wanted to look at the market forecast chart because you like the way that EEM's chart is looking. Remember, you can come onto the chart and just right-click, go down here to maximize cell, click on it, and then that will expand that miniature chart to a full screen. And once you do that, then you can see the actual technical indicators that are listed down below. So when you read this label and it says intermediate 93.71 and rising, it's referencing this green line on the market forecast technical indicator, and you can see that the label confirms that down below here as well. So just a quick little tip there for you in case you weren't aware of that feature. So let's kind of have this conversation now. Maybe we'll start with the charts in the lower left-hand corner, since those are the ones that have the pink background colors. Now, as I look at these, there are a couple that are more concerning than others in my book. And the two that are the most concerning in terms of their posture are long-term U.S. Treasuries, which, remember, we don't mind that. I still have that open bearish trade on TLT that I presented to you guys here in this particular presentation back in January. That's going to roll off our books here very soon. Remember, that was the February expiration periods. But until then, I'm still kind of enjoying the fact that long-term U.S. Treasuries are falling, because that was a bearish trade on that. So that is something I'm happy about. But you can see here that we have 3 straight dots that showed up on our chart here last week. And those dots represent bullish market forecast clusters, or some of you might refer to them as oversold clusters. If I right click on that chart, you can see that these 3 dots appear on the market forecast when we've got the green, the blue, and the red lines all in the lower reversal zone on the same day. So for TLT, we had that there on the 3rd, the 4th, and the 5th of February. And we've had a little bit of a reversion to the mean the last couple of sessions. We were up today, not much, but 0.07%. That candle doesn't look all that attractive right there. It kind of looks like more of a topping out candle, almost similar to what we saw back here. So if that's all that the bulls can do with treasuries here, after having 3 straight oversold cluster signals, boy, there's just not much strength there at all. Typically, you're going to see a little bit more of a reversion to the mean, and maybe that's coming later this week. We'll have to see. But as I always tell you, My assumptions when I see a setup like that is we might very well get a reversion to the mean, but until I see otherwise, I'm going to assume that that pattern or that trend is going to hold. In other words, get a quick little pop higher and then it rolls over and continues downward in the pathway in which it came from. And so we'll keep our eye on that, but just be aware that we have had some serious oversold clusters there. Same thing can be said here with the foreign bonds. That's a pretty ugly chart there as well. Had a little snapback today, but that's not much of a move after such a healthy decline. There were so many down sessions in a row along the way. These other two charts on the bottom, I don't think are quite as bearish as those two up there. It's not that they can't turn into bearish charts, it's just that right now you see more choppiness sideways than anything. With the US dollar chart, notice that it has a light pink background as opposed to the dark pink on the other three. That light pink background is a situation where you have a falling intermediate line, but it's falling between 80 and 50. So again, if I right click and go to maximize sell, here's what that looks like, right? Last week we had a bullish, strongly bullish intermediate posture on the US dollar. It has fallen for 3 straight sessions now. That was enough of a give back where that green line has now fallen out of that upper reversal zone. But we don't consider that strongly bearish. We just consider that weakly bearish. It's kind of like I have mentioned in previous sessions when we've seen situations like that where you can think of the weakly postures, not the strong postures, but the weak postures as being clouds in the sky, which we don't know if it's going to lead to an actual storm or not, but they're giving us a heads up that things aren't going quite as smoothly as they once were. And so right now we're kind of at an important level here for the US dollar. We're basically sitting right on the rising 30-day moving average. We could very well get a bullish bounce out of this starting tomorrow for all I know. So that's why I'm not going to get overly excited about the new weekly bearish posture on the US dollar. Now, my own personal perspective is that I do think that the US dollar will weaken longer term. It's just that right now we've seen enough of this kind of bottoming behavior in the technical analysis of the chart that I want to respect that in the short term, and I wouldn't be surprised if we get a little bit of a bounce from this level in the US dollar. So that's why I'm not paying too much attention to that weekly bearish posture that the intermediate line is giving us right now. Gold, as you can see, is also kind of a sideways chart. We've been all over the map with gold. We're down pretty significantly from where we were in the summer of 2020. In fact, I had a buddy texting me today. Don't want to spoil the surprise. I don't think his wife listens to this, but he was asking if now would be a good time to buy her something gold for an anniversary present. And I said, well, that sounds like an interesting idea to me. But for him, he was saying, well, gold is priced so high right now. And I said, well, not really. I mean, if we were to look back and take a peek here at where was it? The 6-month chart maybe can kind of give us this impression. Gold 6 months ago was way up here, and it has been in a steady downtrend for basically 6 months. The last 3 months, we've seen more kind of sideways price action. And we have had a couple of those oversold cluster signals here more recently, which we're now receiving that reversion to the mean move right here. So this is a little bit more natural, compared to what I was just mentioning a moment ago with long-term treasuries. That was a little bit of a whimper. This is a little bit more of a legitimate reversion to the mean type of a move that we've seen here. But you'll notice we are still below that falling 30-day moving average. This one has shown a tendency to break through there in the past. So I don't know if this one is necessarily going to stop there, right? The last time we had all of these oversold cluster signals back here in late November, we ended up going up, and I might have been a little nervous if this thing was rolling over right here, but you can see it eventually surged right past it, and it did so over here as well. So, just like anything, no chart's going to be perfect. No technical indicator is going to be perfect. Every entity and every security is going to have its own personality. Some charts really respect moving averages. Others don't do that quite as much. And gold is one of those charts where you just don't really get the same respect level for that 30-day moving average. So in this case, I'm going to assume that it's probably going to start struggling at this red line, as I typically do with other charts. At the same time, I'm not going to be surprised if it surges through there, because it's shown a tendency to do that in a couple of the cases in the past. Either way, it doesn't really change my attitude towards it. We don't really have an uptrend, right? We have a sideways trend that we're dealing with here. And similar to my comment a moment ago where I expect the dollar to weaken over the long term, I do expect gold prices to go higher over the long term as well. Remember, those two usually go hand in hand, weak dollar, strong gold, or vice versa. Anyway, as we look at the green charts now, oil has been on quite the run. Notice that oil was up yet again here today. So we've been seeing some really awesome price performance in oil, and it was up another 0.5% today. A lot of these other charts are looking quite strong as well. Of course, you don't need me to tell you that Bitcoin has just been absolutely ripping higher ever since the news broke that Elon Musk was putting a lot of Tesla's treasury money into Bitcoin. It was like $1.5 billion or something like that. So anyway, huge move to all-time highs on Bitcoin here in the last 48 hours. Today we kind of just held the line there, just a hair below $50,000 per Bitcoin. And then all of these charts up here on the top dealing with our stock markets, they all look pretty rosy as well. Not so much on the preferred stocks, but remember that's a little bit of a different animal. These other three at the top are traditional common stock indices, and they all look pretty strong, whether you're in the United States or whether you're in China or India or even in Europe. You're sitting pretty good right now. Let's do another 12 grid analysis here and take a look at our sectors today. This is chart 5C for those of you following along at home. You'll see here that all of our charts are green except for healthcare in the lower left-hand corner here. Healthcare was actually the sector that we concentrated on in my dividend growth investing class today. Remember, that particular class is a long-term class focusing on more so value investing and fundamentals as opposed to what we teach you here in these videos with technical analysis. So it's a little bit of a different ball game there. If you're interested in that, that recording is posted if you're a premium member of ours. Anyway, with healthcare stocks not really going up at the same pace as others, remember that presents some maybe more value-oriented opportunities where dividend yields are a little bit more logical there compared to what we see in other sectors where the sectors are breaking out to all-time highs in some cases and just not presenting great yield opportunities. Anyway, it's good for the market's health to see so many green charts like we see here in front of us. Now, a couple of them are this lighter green color, so that's materials and staples. Both of those are what we would consider to have a weakly bullish posture, not a strongly bullish posture. Of the two, materials does look stronger from a technical analysis perspective. It's kind of grappling with its 30-day moving average here, but that was such a strong give back and such a strong push below the moving average. My fear is that materials may not get back to their high on this particular push. Maybe we get a little bit higher, and then if the market does roll over in the coming weeks, just like the normal ebb and flow, breathe in, breathe out of markets, I would guess that materials probably doesn't have the oomph to get back to its highs during this current run. So it might take a future run to get it back up above where it was trading here in January when the US dollar was particularly weak. Some of these other areas look quite a bit better. In particular, you're noticing things like communications breaking to new all-time highs. We've been having that conversation here quite a bit in recent weeks. Started with the Netflix earnings report, and then it carried on with Alphabet/Google, and those areas have continued to go higher. In fact, the stock that we bought in my Monday top-down trend trading class yesterday was from the communications sector, as it was another breakout stock. Technology is still holding up pretty well. You can see it finished a hair lower today, but did touch an intraday all-time high before closing a little bit lower. And as I mentioned with the sector selector information, no surprise to see discretionary here hitting new highs within the last couple of sessions as well, even though it was down a touch today as well. Energy was our worst performer today. It was down just over 1%. Our best performer looks like it would have been real estate. It was up 0.45%. All right, let's get into our trade application example. It will come from the technology-oriented area. And so, as always, I've already done the trade. It was done before the bell. And so those of you that are premium members would have received my Telegram trade alert about it. And the stock is Citrix, ticker symbol CTXS. This is another one of those kind of basic bullish swing trade setups. Been noticing I've been doing a lot of bullish trades. In fact, I went back and I think there's only been one bearish trade I've taken so far in 2021, and that was the TLT, which, remember, when you're bearish on long-term bonds, it oftentimes means you're bullish on the market. So it's felt a little bit weird that I haven't done very many bearish trades. They've all been bullish, but there's a reason for that. There hasn't really been excuses to take bearish trades. We'll eventually get there, right? And who knows when that starts, but we're just trying to read the charts, and the charts have been bullish, so we're trying to kind of lean into that strength. And here's another example of a stock that is setting up pretty nicely for a bounce. You can see right here that the stock has bounced the last 2 days up and off of its 30-day moving average. The moving average is now rising. You can see it's changed its color to green, telling us price is above a rising moving average. You can see that this stock has outperformed the S&P 500's dotted line down below over the last 3 months, so it's an outperforming security. You can see that the stock has a bullish intermediate posture because the line is at 41 and rising. That's considered weakly bullish, so not a strongly bullish, but nonetheless, good to see that the intermediate trend traders might be somewhat interested in it. But for our purposes in this conversation, why I became interested in it was from a swing trading perspective. There we use the near-term line, that blue line on the market forecast. That's why I've got that colored a little bit with a heavier weighting here in the market forecast indicator down below. Not only is the blue line back to being considered strongly bullish up there in the upper reversal zone, which is why we see the background color changing from pink to blue here in the last couple sessions, but in addition to that, we also have what's known as a little bit of a bullish near-term divergence signal. You can see that we've got a trough here in the blue line on February 1st. We have a slightly higher trough here on February 5th. So in other words, higher lows on the indicator itself. The two price candles that's associated with would be this candle right here that I'm pointing at and this candle right here that I'm pointing at. Price went down at a time when the underlying indicator strengthened. And so it's telling us that those that are only looking at price may not be picking up upon some underlying bullishness that is taking place with this security right now. So you can kind of see where I've got my levels here, but just for the benefit of those of you that are premium members, remember if you're looking for specific trade details, that's why you want to get our Telegram trade alerts where I let you know the precise levels where I'm putting my stop losses and the precise levels where we're putting our target prices as well. So this is a basic stock trade for a technology company that looks to be setting up for an interesting bounce. And remember, if you like these swing trading ideas, I'll be teaching my factor-based swing trading class tomorrow morning at 11 a.m. Eastern Time. In fact, we just closed out another profitable trade earlier today that we just placed last Wednesday. So great to see when we anticipate going into trades for about 3 weeks as swing traders, but get them to hit our price targets in less than a week. Those are always momentous occasions for us. So I look forward to seeing many of you tomorrow morning in my factor-based swing trading class. For the rest of you, I'll see you on Thursday, the next time I do this free YouTube video. We really appreciate you guys checking it out. If you appreciate the effort that it takes David and I to put into this product, again, the way that you can help us along is just by taking 5 seconds out of your day to click like for us there on Twitter. Remember, there's 4 different ways you can go about that. You can either go directly to Twitter, where I'll have it pinned to the top of my timeline. You can click like directly below watching the video if you're doing it on our website in the Twitter widget. You can click the Twitter icon within the email notification that you would receive, and you can also go into the description area for those of you that are watching directly on YouTube, and you'll see a link directly to that tweet. So we make it easy for you. It's just a matter of whether you're willing to put the effort in to help support the product, and many of you are, as was witnessed here this last Thursday. Thank you so much for that. I'll see you all in a class real soon. Until then, best of success with your trades and your investments. Goodbye for now.